folks, Matt Adam here, come to talk to you about some crypto. So chances are lately you've heard the terms cryptocurrency, tokens, blockchain, a bunch of these new terms passed around both between your friends. I know the SEC has been talking about this stuff a lot recently. Lots of regulations have been talked about.
And that leads to the final element, and that is tough enforcement. Led by the CFTC's Virtual Currency Enforcement Task Force, we've launched several civil actions over the past few weeks, cracking down on fraudsters and manipulators, and more will follow.
So chances are you're new to this field and you want to know what it's all about. Or maybe you heard about your friend or someone on YouTube or a friend of a friend of a friend who made a bunch of money in crypto by trading. So you want to know what it's all about. Okay, well, most probably do. Cryptocurrency, it's essentially digital money. So you might think, okay, well, my bank is all digital now and that's where I keep my money. It's the same thing, right? Nope. So banks store your data on internal databases. It's all centralized. And the big thing about cryptocurrency is decentralization. We'll get to that in a minute. So what is crypto? Crypto in itself, like cryptography and cryptocurrency and all things crypto, it has to do with encryption. So what is encryption? Well, it's essentially taking numbers and making them different numbers. So you think about password protection or encrypted messaging. So what that's doing is it's taking the stream of data, all those ones and zeros that you know are passing through the ether and the cloud and everything. It's taking all those ones and zeros and turning them into different ones and zeros in a predictable manner, but predictable based on some key. So unless you have the key, you can't unlock that encryption. So we have cryptocurrency. So it's encrypted currency. Why? Why would you need to encrypt that? Well, currency is important. It's how we trade value for goods or services. Currency isn't necessarily hard money, like cold hard cash. That is certainly currency, but currency is anything that's traded for something else. So way back when, seashells might have been used as currency, or beads, anything really.
I'll take 5 of your rat skins and one of those tepid lemonades.
It's one chicken, mate. It's not a chicken.
No, that's much better than a chicken, my friend. That is gold.
What?
Gold. The currency of the future.
So we have cryptocurrency, encrypted money, so to speak, on a blockchain. What is a blockchain? Okay, so blockchains are a public ledger, a distributed, immutable public ledger. So what does distributed mean? Well, distributed means it's not in one place. It's spread out all over the place. Distributed in this sense means that there's a bunch of servers out there on the internet. Each one is what's referred to as a node in the network. It's a server. So it's like your home computer connected to a bunch of other home computers and everyone shares a little bit, right? So that's decentralization in a nutshell. If all of the nodes, all of the servers or computers work together to form this network of communications talking back and forth about the blockchain, that's distributed ledgers. So what does immutable mean? Well, immutable means you can't change it. Compared to mutable, so mutable data, you can go in there and you can muck about with it, you can change it. Immutable means once it's set, that's the value and it can never change no matter what. You cannot change it. So an immutable public ledger essentially means anyone can contribute to it. But once they do, it's set in stone. It's essentially done. It has been committed to the blockchain and you can't change it. So every record that gets submitted to the ledger is there forever, which means that the ledger is constantly growing. The ledger is essentially, think of it like a spreadsheet. Every transaction that happens on the blockchain goes into the ledger, goes into the blockchain forever. So since the start of the cryptocurrency, you can look back and see every single transaction that's happened for that currency. Anyone can download the Bitcoin blockchain or the Ethereum blockchain and view all the transactions. In fact, there are transaction viewers online like Etherscan, where you can go through and look at all the addresses, all the transactions, all the nodes, and you can see everything about the blockchain. It's all there for anyone to see. So that's blockchain in a nutshell. You have a ledger that anyone can submit to, that once the submissions are accepted into the blockchain, they're there forever. They're immutable. How do you submit a transaction to the blockchain? Well, anytime that a coin or a token or a piece of currency is traded from one wallet, from one person to another person, that's a transaction. So sending Bitcoin or Ethereum or doing a trade, any of that is a transaction on the blockchain for everyone to see. So you might think, okay, well then what's all the hype? If anyone can see it, how is it anonymous? And why are all these bad guys using it? Well, first off, Bitcoin is it's not solely to be used by the dark web or by Silk Road or anything.
In 2012, the world's drug market was completely upended by the internet. The widespread adoption of Bitcoin and the invisibility of the dark web allowed a bright but misguided 28-year-old libertarian to suddenly become one of the world's biggest drug kingpins.
Any tool can be used by bad people for bad purposes, no matter how good of a tool it is. And cryptocurrency and blockchain tech, it's a wonderful tool. But that also means that it's a wonderful tool for everybody. The anonymity comes from the wallets, right? So think of wallets or addresses like an email address. You send an email from your inbox to your uncle's inbox, right? So that's a transaction. You sent data from one point to another. However, that email address is registered to you. It can be tracked to you. Likewise, your uncle's email address. Wallets, on the other hand, it's just a string of numbers and letters, depending on the technology, on the blockchain, the addresses. They're not essentially human readable. So anyone can create any address, and you can send to any address, whether somebody owns it or not. All possible addresses exist at the same time, essentially. So if nobody has ever created an address with a certain signature, you can still send to that address. It just will disappear, the transaction, essentially. The anonymity comes from the fact that I can create 1 million different addresses, literally, and I can use each one once for one transaction, which means that you can't run any sort of heuristic forensics on the wallet addresses to figure out, okay, where's this person been shopping? What have they been doing? Okay, well, the signature of the transactions means it's probably this person or someone in this country or whatnot. If you use disposable addresses, that's completely anonymous. It is almost impossible to track. So, good and bad, it's, again, just a tool. So, let's move on. We've covered blockchain, immutability, ledger, distributed networks. Let's talk a little bit about the differences between things like Bitcoin, which is a cryptocurrency, and Ethereum, which is a token, right? So, what's the difference? Well, they both have uses where you can buy things with them. They're both blockchain tech. So, Bitcoin was created essentially to replace money. It is a cryptocurrency meant to be used as a currency. So what does that mean? It means it's a security. It is meant to be money, and you use it as money. It is a store of value. Ethereum, on the other hand, is a utility token. Sure, you can use it like cryptocurrency, like money. You can buy things with it because it has inherent value. Just like gold has an inherent value. However, gold is not necessarily a security. It is something that you can use to make rings, you can make jewelry, you can make conductors with it, but it has inherent value, so you can trade it for things like a house or a car if somebody will take it.
This has unlimited use.
Can I eat it?
No.
Can I wear it?
No, you're...
Can I use it as firewood?
No.
It's starting to sound pretty limited, mate.
How can you use it for anything other than currency? Okay, well, that happens to have something to do with the Ethereum blockchain. The Bitcoin blockchain and the Ethereum blockchain differ in one big way. Ethereum works with smart contracts. Well, I've heard that term before. What does it mean, Adam? Smart contracts are essentially a piece of code that runs on the blockchain for a transaction. So think of the blockchain as one server that's constantly running, and it receives inputs and stores it. So if the blockchain has this algorithm always running that says, if I receive something and it's this value, take this action, right? So you get these transactions coming in, and it keeps running against this algorithm, and the blockchain spits out certain actions based on data that's in the transaction, because you can actually embed data in the transaction signature. So Ethereum's looking at this data coming in, and it can take actions based on the state of that data. Now, by default, it does nothing, but you can say you write up your own Ethereum-based token, and you want it so that every time somebody deposits a certain amount of money into a given address, such that anytime an address reaches a certain amount of tokens in it, you want to trigger off an action, say like transfer a document from one person to another, such as like buying a house. So you can set up a smart contract where you have an address set with a smart contract that once a given value has been transferred into that wallet, in fiat, where it's the sale price of the house, you can have the deed of that house automatically transfer from one person to another on a smart contract, such that as soon as the house is paid for, all the paperwork's done. That's pretty powerful. Same thing with cars. Same thing with anything that you're purchasing. And that's just one example of a use case for a smart contract. So smart contracts are baked into the Ethereum technology. And there's lots of tokens out there that are based on the Ethereum technology. The majority of them are called ERC20 tokens. Know that a lot of tokens out there are based on Ethereum because Ethereum's awesome due to the ability to code in smart contracts. So that's the main difference between your Bitcoin cryptocurrency and your smart contract tech like Ethereum. Why does this matter right now? So last year was really big in crypto because a lot of new tokens and coins came out. Everyone was releasing an ICO. What is an ICO? It stands for initial coin offering. And they kind of stole that phrasing from the stock markets for the IPOs, the initial public offering. So the initial coin offerings mean we have a new coin that we want to release to the public, but we want an initial sale to gather funds and to increase awareness. So we're going to hold a private or public ICO where anyone can buy a bunch of our tokens for cheap before they hit the open market. So before you can go on Binance or Bittrex or anything and buy the coin, you can buy it directly from the company minting it at a discounted rate during an ICO. And that a lot of people did that because you can raise a lot of money as a company releasing a token doing that. We're talking millions, billions of dollars. And why would you as an investor care about investing in an ICO? Well, if I can buy a token for 10 cents a piece during the ICO, and as soon as it hits the market, it's selling at $1, well, I could buy 1 million of them and sell them all for 10 times profit. Easy. We're not talking about 10%, we're talking about 10 times. So every dollar that you put into the ICO, you're getting $10 back instantly. You're not going to find investment opportunities like that in many other spaces, which is why a lot of scam companies got involved in the ICO market, because they could raise a lot of money and not really do anything other than just release a token. So you have all these new ERC20 Ethereum-based tokens coming out in 2017 that tons of people are making tons of money on. But at the end of the day, in a year's time, those tokens will expire. They'll die off because they have no intrinsic value other than just being a token.
This here should serve as a warning to you, and just a reminder that you need to be very, very careful about which projects you're thinking of investing your money in. And so what they found were that a whopping 81% of all ICOs were complete scams. That is an enormous figure. That means that more than 4 out of every 5 projects you can possibly look at are going to end up being a complete catastrophic failure from the get-go. They'll have no chance of success at all because they're considered to be outright scams. And then adds into that as well, you've got a further 6% that just failed. You had 5% roundabout that had gone dead, and only 8% out of the entire 100% of ICOs went on to trade on an exchange.
So this gets to the heart of utility and utility tokens. Which tokens are going to survive the long term, like Bitcoin has survived? Well, tokens that, first off, actually have utility, and secondly, actually have people utilizing that utility. So there's one token in particular I want to highlight. And yes, I'm biased because I participated in their ICO, but it's worth looking into because they have a solid use case. You might be into others, that's fine. This is just my my little pet project, I guess. So the token in question its symbol is OST. It's the token formerly known as Simple Token, and OST now stands for Open Simple Token. The gist of it is that with Simple Token, anybody can mint their own tokens. Anybody can work on their own side chain, their own blockchain, without any technical knowledge. They recently had their public alpha testing for their OST kit, which allowed people to mint tokens, play with the side chains, play with transactions and all that. Get to see the SDK and the API and play around with those, and it was really cool. The long and short of it is, if I want to tokenize my business or my forum or a certain part of my company, I can do that easily and without having to hire any blockchain developers, simply by clicking a few buttons. Seriously, it's that easy. So that's the utility. Anybody can utilize this token to tokenize their own economies. So if you have an online store and you want to accept cryptocurrency, well, you could set it up to accept Bitcoin or Ethereum or any of these other tokens out there. Or you could increase brand awareness by minting your own token and running it on an Ethereum sidechain. Which means that all the transactions for your coin, for your token, will be happening on this sidechain and not on Ethereum mainnet. So if you recall, and if you haven't heard about it, I suggest you look it up real quick. CryptoKitties was essentially a trading platform for things like trading cards, but there were cats. They were crypto cats. But it was all on the Ethereum blockchain. It became wildly popular overnight. Tons of people wanted to buy them and trade them.
The first place you really want to start is on the marketplace. So we're now in the marketplace, and this is where you can go through and buy your CryptoKitty.
That's Peter with Decentralized TV, your best place for news on Bitcoin blockchain. And WTS of the day, CryptoKitties raises $12 million from Howard's Union Square. What the hell?
And it just completely clogged up the Ethereum blockchain to the point where transactions were taking forever. Why does it happen? Well, all these nodes that we talked about before, there's a set number of them. Now, you can add or remove from the network, but there is X number of nodes at a given time in the Ethereum network. And if each one can handle 100 transactions per second, and you have 10 of these, so you have the ability to handle 100 transactions a second, but you're getting bombarded with 2,000 transactions per second across the network, things are going to slow down. You're going to start getting bottlenecks, and all these transactions are going to start buffering up in caches. So everything slows down. How can we mitigate that while still making cryptocurrency mainstream and allowing anyone to utilize blockchain technology? Well, you need side chains, side blockchains, where every transaction is only that one token. So OST allows you to do that. Why is that important now in 2018? Why is this year going to be the year of the token? Well, last year we saw all these new tokens come out with all these new ICOs, and nothing really came of it. Lots of promises were made, not much tech was actually implemented. This year, we are going to see all of the legit tokens actually start to release products. OST is going to be releasing their OST kit beta and version 1 at some point this year. I believe beta is due for release in Q2 or Q3 of this year, and by the end of the year we should see the official release. That means that in a few months' time, any company, for whatever purpose they have, can tokenize anything virtually for free. All they have to do is buy the tokens, and then they can mint. So you're going to be having all these companies for tokens actually start producing technology that will allow people to utilize their tokens in the way that they were meant to be utilized, not just as currencies. And then you're going to have other companies, all these scam coins that released ICOs last year, that are going to die off because A, regulation, and B, nobody's going to want to use them. The value is going to completely get destroyed because they made all these hyped promises and they haven't delivered on them. So people are going to start selling off, the price is going to plummet, and then they'll just die off. And that's good. That's good for the market, because we want to see survival of the fittest. We want to see all the legit projects with the best use cases survive and thrive. And that's going to start this year, because cryptocurrency and tokenization in general has started gaining mass adoption. You've got companies like Kodak, like IBM, like car companies. I believe Ford recently said that they're going to start tokenizing all their smart cars for the communication between the cars. Even Porsche is working with a company called Zane in Germany, which is a partner of OST, Zane is. And they're working with Porsche to tokenize the smart car smarts, right? So you have all these huge companies and even small companies that are real brick and mortar businesses that are starting to see blockchain for what it really is, a great tool. And they're starting to adopt blockchain tech in their companies. But they need the tech there to adopt. And now it's there. So all of these tokens are actually going to start getting used this year. You're going to hear more about companies tokenizing and projects coming out that are crypto-based or blockchain-based. And it's just going to explode. And come next year and the year after, by 2020, everything is going to be tokenized. You're going to see blockchain everywhere.
I am a big believer that eventually asset-based coins will replace small cap stocks. Mm-hmm. There's a big deal coming in New York in the next 3 weeks. I'm involved in it. It's under NDA, but it's $400 million coin issuance for a real estate asset that you've heard of.
What?
And yes, I'm going to bring this forward as soon as I can disclose it.
Tell me what you can.
So the idea is that an owner of a very prestigious brand hotel in this city is going to internationally issue an asset-based coin for ownership, and you'll participate in the distribution of a smart contract through the blockchain. You will be an owner of a third of this hotel.
Wow.
If this works, it's going to be the first of its kind. I'm very excited about it.
And it's already there in some parts of the world. Japan is huge on crypto. Korea, China. Here in the US, not so much. Great things are happening across the world, but it's slow to start here in the US. And that's okay, because the US financial system, for whatever flaws it has, they like to be careful about things. They don't like to adopt new technology until it's been vetted. Well, cryptocurrency and blockchain is being vetted, and pretty soon it's going to experience mass adoption and mass explosion. We're talking about exponential growth.
I remember back, I was lucky enough to get in the cell phone business back in the early 80s, and everybody thought it was going to be a small business, and they were wrong, and I got rich. I think we're looking at the same kind of transformation about to take place, and we are going to have to wrap our arms around. We're focused a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating, file sharing or extra computer time.
So that's everything in a nutshell. If you've got any questions, please drop me an email. I'll leave my address. Look me up on Twitter. Look me up on Telegram. This right here, this is my username. So feel free to Google me and ask questions. Drop some comments here on this video and I'll get to them. And hopefully I'll be able to do weekly, if not weekly, bi-weekly videos like this answering user questions. So give me questions, give me things to talk about, because I could ramble on about crypto all day. And while that might be interesting to some, I like to stay on point. So give me some points. Thanks everybody, and I'll see you next time. Have a great day.